Good morning, viewers. And I would also like to say good day, considering the new normal. I'm sure a lot of you are signing in from across the world. And so, irrespective of where you are, I think it's important that you come in here for this particular uh, ET Summit and look forward to essentially interacting with you. I have a suite of eminent panelists here who essentially are going to help you decrypt the entire aspect of fintech, financial services, and the whole range of innovations that are happening in this particular space. As all of us know, financial services is the bedrock of all industries and provides the impetus that is required to essentially turbocharge an economy, and which is essentially where we look at how do we basically turbocharge the economy to continue to be vibrant Bharat and essentially be country which essentially reckon with across the world. And with that, I think it's also important to see there are a whole range of innovations that are happening from an India perspective. How do we take this innovation not only within India from an urban and a rural perspective, but how do we also help these particular companies start playing in the global field, and how do we help them essentially take these particular services to the global marketplace, and which is what our particular panelists are going to be talking about. And I think last but not least, but I would say that the government of India essentially has been significantly supportive, so has been the regulator in terms of providing the right level of impetus to this particular industry, and the kind of policy changes, the kind of regulatory support, all of which essentially have been fantastic, which essentially has basically spurred this entire suite of services that are being provided. And all of these suite of services are being provided to everybody, which is you, the citizens of India, and irrespective of whether you're urban, rural, whether you're a small trader or you're a large company, irrespective of that, how does financial inclusion include you and help you participate in the journey of vibrant India? With that, let me go on to my first question. Which is going to be a very open question I'm going to ask to almost all the panelists. The opening question to all the panelists is if you can talk about how all of the things that have happened with demonetization and then essentially with the pandemic and all of the innovation that is happening, how is India essentially galloping towards being a true digital economy? And what are your thoughts in terms of what can be done further in that particular space? With that, let me go to Sanjeev Moghe, Axis Bank.
Hey, thanks, Shree. Good morning, good day, everyone, and happy to be on the panel. So actually, it's been very very eventful 5 years if you start counting from 2016 onwards. One was, of course, Demon. Looks like it happened a long time back. It's been actually less than about 5 years since then. So that did spur the first level of, let's say, acceleration of digital payments. Digital, by the way, at that point of time really meant credit card, debit card. UPI didn't exist, so we had to actually go back to a time when UPI didn't exist. That's when it had just kind of came in post demon, by the way. And early days of UPI actually was about people transferring money to each other. So it kind of initial stuff was taking over from, let's say, your NEFT transaction, IMPS transaction. That's what started happening with UPI. Then if you accelerate the next 2 years, obviously there's organic growth and credit card, all of the normal forms of digital payment that people use. With COVID, one more thing happened, which is that people were scared of moving out, actually did not want to move out, and it was safe not to move out. So all of those aspects, you could be in any of those buckets, but what it meant was you wanted stuff delivered door at your doorstep, but you had to also pay the neighborhood store. How would you pay that? Many of these stores then moved to digital form of payment. So he will send the delivery to your home, but you had to pay him. You didn't want to go there to pay the payment. So then therefore you saw essentially UPI taking on not just higher volume, but a higher share of P2M within UPI. If you would ask me, that I think was a critical movement change which happened then. Even as the COVID eased a bit and people started going to the store, then instead of actually handing over your credit or debit card to be tapped or swiped on the EDC, people started taking out their mobile to make a QR payment. For a long time, people like us, many years in payments industry, we thought QR is not going to work. And I'm happy to say, I think many of our beliefs have also changed. So those things essentially meant that digital payments now is not only about what you use, whether you're using UPI or credit card or debit card, but actually the form of payment itself. It's not only everything tapped on the EDC. A lot of payments are happening through QR. A lot of merchants, by the way, are also moving offline to online. So offline to online is not only everybody moving to, let's say, Amazon, Flipkart and distributing the goods there. It actually is about your neighborhood store having a simple website or something like that where you can order, or even if you go there and you tell him the order on phone, he actually sends you a payment link. All of this means that payments are becoming more digital. I'll come back to on the security aspect and some of those aspects later, but essentially this walk has been one way, and we have seen it. Once you go one way, you don't go back. Today, none of us are going to go back to check payments. None of us are now going to go back saying, let me now pay in cash. Of course, it's a WIP for a long period in a country like this. But that I would put Shree as the kind of opening remark over here. So essentially one-way walk, secular movement, accelerated by cataclysmic events, good or bad in a health, and all of those aspects are different, but definitely accelerating the move and the speed of digital payments in India. Back to you, Shree.
Over to you, Ganesh. Ganesh from Airtel.
Yeah, thanks, Shree. Thanks, Sanjeev, and thanks, my co-panelists. Delighted to be a part of this conversation and looking forward to sharing my views and hearing views from each one of you guys. My view that over the last 5 years, there have been a lot of innovation which has been focused on 3 key consumer pillars, which has really helped drive financial inclusion and the digital agenda. I think the first one is ease and convenience. The second one is around security, and the third one is around value. And I think a lot of work done by all brands, key brands, including, regulated entities, including the likes of NPCI, on each of these 3 pillars have really helped, accelerate digital transactions. Of course, COVID did play a part. But that said, if the innovations on these 3 pillars didn't exist, then I think things would have gone back to what it was pre-demon. But today, the digital transactions are far higher than what it was 3 years back or 5 years back. And I'll possibly take a minute and talk about each one of these 3 things. Let's talk about ease and convenience. And as Sanjeev mentioned, UPI, I think has been possibly the single largest innovation which has come from the NPCI stable, which has really transformed the digital landscape. And it's a classic example of how ease and convenience have really sort of taken stuff forward. Sanjeev did mention that digital doesn't necessarily just mean online. It also could be an assisted offline mode. Airtel Payments Bank over the last 4 years has set up 500,000 BC agents in the country, most of them in Tier 5 and Tier 6 markets, where a customer can actually walk into a retail outlet, a Kirana outlet, with a fingerprint, withdraw cash, deposit cash, and do any financial transaction he, she, or they so need to desire. So those are examples of how innovation in ease and convenience have really transformed the way in which digital transactions are sort of done. I'm proud to sort of say that over the last 12 to 18 months, Airtel Payments Bank would possibly be the fastest growing brand as far as Aadhaar enabled payment systems is concerned. Just as an example of how focusing on the customer's insight and removing roadblocks to driving adoption is helping. The second area really is safety, which I do believe that possibly in some way or the other is a much larger problem in India as compared to possibly a few other global markets. Again, a lot of innovation done by major brands, has really helped overcome the fear of frauds happening on our bank accounts. Again, a classic innovation which has come from our stable is SafePay, which offers a third factor of authentication, which really makes sure that your transactions are safe. And third one clearly is value. And I think all of us do know that digital transactions tend to be lesser cost, more efficient, and hence there is a very, very strong way in which we pass on some of this value to the customer, and the customer actually sees benefit in doing transactions digitally rather than through an assisted mode. So I would think that these 3 have been the key pillars on which we've seen significant growth on digital transactions. I think Demon and COVID have possibly pushed customers to forcibly adopting them. But that said, if these 3 pillars weren't exist, then customers would possibly go back to cash. But even post Demon, even post COVID, we do see a lot of customers who have adopted it once continue to stick to digital transactions because of the work done by, I think, the entire industry around these 3 pillars. That's what I would sort of say. Over to you, Shree.
Peter?
Yes, good morning. Thank you for inviting us onto the panel today. Very interesting discussion taking place. So ETInnoSolutions Global is a full service payments service provider. We partner with some of the largest acquirers and issuers in India today. We have a very clear strategy towards digital first, because we see the integration of lifestyle services, banking services, and payment services all coming together, generated by the back-end APIs that are now prevalent in the market, driving forward open banking. And with that integration, it makes a much more seamless customer experience, and we can increase the customer centricity. But also for merchants and for other retailers, we're looking to help them improve their operational efficiency, generate higher profits, and have greater customer intimacy. And the way that we're doing that is to increase the interoperability. So I think the banks have opened up a number of channels, and the fintechs have then come and enriched a number of those channels as well. So you'll see on the panel today, people providing lending services. There are others that are offering credit scores. There are others that are offering prepaid cards. And the support of the regulator has been there, allowing account aggregators to share information securely across providers today. And the regulator has also made sure that consumer protection is key and forefront of all of the innovators, disruptors that are working in this space. But at the same time, they've driven the companies like NPCI to introduce things like e-Rupee, which I think will continue to see the volumes of digital payments grow across the different communities, and spread not just from the large cities, but also into the developing cities and the rural communities.
Thank you, Peter. Vimal, over to you from EarlySalary.
Yep. Thanks. I think so. Good morning to all of you. A very interesting subject. And I think the last 5 years, things have changed a lot. I mean, this is specifically in the digital payment space. And so we at EarlySalary we are a 6-year-old fintech company providing the digital lending and to the young professionals ranging from 5,000 rupees to 5 lakh rupees, entirely fully digital, and specifically covering the cash, the broad spectrum of the services across the cash loans. The BNPL is another wave, I think so, which is digitizing many of the merchant payments. And so we are focusing on the BNPL side, buy now pay later, wherein we work with almost like 10,000 merchants in assisting them to help their customers to buy their product and pay services in EMIs. So yeah, and specifically last post-COVID, there were in the credit industry, definitely there was some kind of suspicious in terms of whether this impact of this COVID will be long term. But then we see the impact was not that high, and now we are again back to the pre-COVID or more than pre-COVID levels. So we are fully digital in terms of making sure that the credit is available to the consumers without having any physical touch. So digital payment has helped in many ways in the lending industry, specifically the IMPS, which allowed the customers to get the real-time payment 24/7. UPI is another way where the customers can repay at any point of time, without having to go for the check and other payment. In lending space, I'm sure in next 3 to 5 years, again, it is going to be a very lot of innovation around buy now, pay later. And the card industry is also poised to change a lot. In addition to UPI has been always a core forefront in terms of the way digitization in India has worked. I feel that lending space will see a drastic change in next another 2 to 3 years. Thanks.
Thank you, Vimal. And over to you, Anil from Vivifi India Finance.
Yeah, I think I get the challenging job of trying to sound different after all these esteemed panelists have spoken. They had their say. So I'll try to do my best. I don't want to rehash the points already made. I think one of the key points that has driven innovation in India is our regulator, right? Our regulator is not just a policy creator or a framework creator. They are establishing corporations like National Payment Corporation of India, which is driving innovation like UPI, which is probably the most sophisticated payments and settlement network in the world, so that we are not left to the likes of an Alipay in China or a Venmo in the US to do peer-to-peer or peer-to-merchant transactions. So we should be really thankful, not only that we have a forward-looking regulator who is adopting, who is very open to kind of adopting new technologies, but actually driving those. We can talk about the account aggregator initiatives that are currently being put in place. So that's been a blessing in disguise. And for us at FlexPay, at Vivifi, we are a fintech NBFC. We are focused on providing credit to low-income, salaried and self-employed Indians, most of whom have been outside the credit ambit. As we all know, the credit in India is primarily limited to the top 100 million people. We have only a credit card penetration for about 55 million people, whereas we have 600 million or 700 million Indians with a smartphone. And more than 400 million of them have incomes less than 20,000 per month. And that's where we come in, and that's where we focus in giving credit as low as 500 rupees to as high as 2 lakh rupees to these low income Indians. And we have to use the innovation that we have been blessed with, right? Like we have Aadhaar, we have eKYC, we have, some of which are not available fully anymore, but we still have eSign, we have eNACH, we have the account aggregator network and the UPI payments interface, all of which we have integrated into a fully automated digital lending platform. Most importantly, the biggest innovation we have done in the recent times, especially COVID has been a stimulus for us, was to kind of use the UPI framework to build credit on top of it and be the first player to offer credit on the UPI rails. So I think that's what I would like to kind of add a different dimension to what already has been said as to how the ecosystem has been developed within India in the last 5 to 7 years, which was primarily driven by the regulator, who is also the disruptor in charge. Even though many of us want to kind of take the tag of disruptor, I think the regulator and the corporations that are involved should get a big thank you from all of us who are trying to hijack that tag from them. So I think we should give them the due, and I think that's kind of a key aspect on this journey in the last 5 to 7 years for us.
Thank you, Anil. I think we heard of rapid disruption. We heard of innovation. Ganesh gave me a very good framework which we can use. Ease and convenience, innovation, value to the customer. All of which essentially, when you really start thinking about it, leads to a lot of transformation and things which essentially lead to financial inclusion. But I think as you look at transformation, that one side of transformation, I think all of your consumers, all of your clients are actually looking for what I would call as trust, right? Trust is essentially security, privacy, quality of service, and all things. So I'm going to go to Peter first to basically, Peter, your thoughts on the whole aspect of how it can become a more trusted environment. And then I think we can take anybody else who wants to speak and include Ganesh, because some of the thoughts came from you. Over to you, Peter, and then Ganesh.
Yes, thank you. I would agree that trust is very important within both the buyer side and the seller side. And I think my esteemed panelists are very much looking at consumers. we also look at merchants and how do we enable merchants to provide the services. So it is two sides of the coin. Whilst you have a lot of new neobanks or new accounts that are being opened, prepaid wallets that are available, in order to enable those customers to actually pay for goods and services, the merchant has to be able to accept this very large stack of different payment types, and for each one of those to be a trusted payment. When we saw Apple Pay come into the market, nearly a decade ago, there was very, very low adoption, and predominantly because merchants didn't understand it, and because users maybe had one or two failed transactions and so didn't trust it, and reverted back to using cash or card. So I think it's important to build that trust within the ecosystem, both on the account and issuer side, as well as on the merchant and acquirer side. India's been very forward-thinking, again, to have two-factor authentication on most transactions, and that has reduced a significant amount of fraud compared to other global markets that we see. But as we see different channels now opening up, whether it's a traditional point of sale terminal or an online terminal on your computer, we're also enabling the mobile phone. So merchants are now able to download a mobile phone with a secure application, accept contactless payments, or even higher value payments with a PIN on glass entry. And so the proof will be there that multi-factor authentication has to come in, whether that's proximity or biometric, so that the authentication and layer can be improved. And at the same time, people want to be able to have more instantaneous feedback. So whether that's on the mobile phone, seeing that the money has exited your account, if you're the payer, if you're the buyer, you're the seller rather, you want to be able to see that those money has been settled into your account. And obviously the settlement system is there to ensure that there is fairness and equity through the ecosystem. So both sides of the coin, building up that trust, interoperability, accepting all the different payment methods, allowing the consumer choice, but making sure everyone is treated fairly and equitable.
Ganesh, over to you. I know that Airtel is doing a few things unique, which almost leads to triple factor authentication kind of thing. So if you can talk a little more about the trust and how you're building that, it'll be great.
Will do, Shree. Thanks, Peter, for those views. I fully agree with what you're saying. For us in Airtel Payments Bank, we are 4.5 years old. We've got more than 150 million customers with us, and more than 30 million of them transact every month on our platform. And these are customers who have a bank account or a wallet or who interact with our platforms every month. And more than 250 million plus transactions happening every month. Now, the reason why we've been able to sort of get this, scale, in a fairly short period of time, has been, Shree, the point that you made about trust. We are fortunate to actually have the brand Airtel, which customers, have loved over several years, I would say decades, and that's been, one key aspect which has helped. The second area, and Shree, you specifically spoke about that, is the area of security. We are a bank, and the reason why customers would choose a bank is because they would like the bank to keep its most, precious, investments and savings sort of in a very secure manner, and hence trust is an important aspect. We've sort of played on the, plank of security, and we've actually launched a very good product a few months back called SafePay, which actually gives a third factor of authentication, and make sure that the transaction will go through only if you authorize the transaction to go through. So I think that's been sort of a very, very significant impact it's made on the life of customers. We've seen a lot of customers adopt our brand and adopt our bank account for the fact that, we are giving them confidence that the money which they have with our bank account is going to be very safe. Over the next few weeks, we are sort of now planning to look at far more number of innovations in the space on security, and that's going to be a very, very important platform for us in the coming quarters. I would also say that trust with the assisted network is important, especially for customers, in rural. India has 720,000 or 740,000 villages in the country, and I believe that there are only 70,000 ATMs in rural India. and hence you've got an ATM for every 10 to 12 villages. Now that's not enough, because customers in rural India get remittances, get DBT credits, and so on and so forth, and hence they need a place where they can actually go and withdraw cash. So traveling, going to a bank branch, there are confidence levels. They don't feel as confident interacting with the bank official sitting on the other side, and hence they trust the nearby kirana to actually give him the right piece of advice, or give him or her or them the right piece of advice on what they should do, how they could withdraw cash, and so on and so forth. So building an infrastructure of BC agents near the customer's residence, appointing retailers or BC agents whom consumers trust and have been interacting for several months, in a lot of cases several years, I think is another aspect of trust which has actually worked very, very well for us, and hence we have found extremely high levels of stickiness of customers doing digital transactions with a BC agent who is nearby. I think there's some research which has been done by other companies, and we have seen it ourselves, that if there is a BC agent at a gap of 750 meters from the customer's residence, penetration of digital transactions goes up exponentially. Because there is a BC agent whom they trust, who can sort of help them with services 24/7 and get all financial transactions done, at in a very easy manner. So I think those are, some of our thoughts and some of our learning, which we've had over the last few years, which has really helped, grow digital transactions and financial inclusion.
Thank you, Ganesh. Anil, you've raised your hand. Go ahead.
Yeah, I think Ganesh has made a tremendous amount of points on trust and how having someone known kind of helps gain the trust in digital transactions. I would like to just, when we are talking about digital transactions, especially remote transactions, when there is no one present, there is a different level of challenge, especially if you are fintech players like us or EarlySalary. We are all taking in information, and one of the most important things which we seem to not recognize in India a lot is the consumer data is owned by the consumer. The privacy aspect of the consumer data is not very well respected. I think it is kind of a bit cultural, because we always, as Indians, we are always into other people's lives, and we think it's our right to kind of comment on other people's lives. I think culturally we are tuned to do that. But if we take our own personal experience, not that any given bank or any given financial service provider wants to do it, but we will all receive calls from some direct selling agent saying you are about to get a personal loan from this bank, or you are about to get a credit card from this bank. And as much as the regulator is putting in a framework with Sahmati platform and e-consent and making sure that the customer consent is recorded and valued, I think it takes a greater discipline from players, everybody who is on the screen, banks and fintechs and solution providers included, that we actually give customers due respect for their data, which they own, and respect their privacy, and have enough checks and balances and processes that are keeping the third-party providers who are accessing some of this data many times without proper consent, and offering services and products on some of our behalf. So I think it is it's an important aspect that we need to recognize. Europe has pretty strong GDPR provisions. US has pretty strong consumer privacy protections. And in India, even the basic, like a do not call list, is not kind of honored much. So I think culturally, we need to shift ourselves and respect consumers' data and consumers' privacy. And that will be a big aspect in building trust as well.
Great. Thank you, Anil. And the next question I will lead into Vimal and Sanjeev. While we heard from one of the panelists earlier on regulatory and in terms of policies and everything that government of India was doing to infuse this particular entire segment and also turbocharge it, not only at the provider level, but also at the consumer level, so that there's a lot of financial inclusion. But I'd like to focus on specific things where, from a regulatory perspective, as to what are a few things that from a regulatory and policy that things have been done very well, And what are some of the other things that possibly help not only you, but a lot of other ecosystem or newer fintech players to come into the forage to basically turbocharge this environment even further? So what is the kind of support you would be looking for from the government, the policy makers, and the regulators? Over to you, Vimal, and next, Sanjeev.
Yeah. Thanks, Shree. I think so. Very important and pertinent questions. The digital innovations brings a lot of questions around the security and the customers' data privacy. I think so. As Anil spoke about the data privacy of the customers, I think so. See, in India and specifically, we at a fintech association level, we have created a phase wherein we all of us have accepted a code of conduct in terms of how the data of the customers to be maintained, and what all things with that data we could do, we will not be able to do. So a lot of these things are being done in at least in fintech space. But having said that, I still feel there is a lot which is required. As Anil pointed out, and I think so even Ganesh pointed out, saying that data privacy is still is very nascent stage in India from the consumer protection perspective. So that is one area I feel personally where some bit of regulation is required from the data privacy perspective. We at EarlySalary definitely respect the data privacy and don't bombard with a lot of calls. Even we don't have the call center where we do calling, outbound calling, or any calling to the customers. So I think so one aspect is definitely data privacy issue in terms of this, and second is definitely the fraud aspect of the trust was the earlier question of trust was very important and pertinent. How see more and more people trust a particular brand or a particular service. I think so more and more people will go for that kind of product or services or a brand. So trust is another factor which goes with the kind of ethos, kind of the kind of culture which each of us have and brings to the customers. So I feel like these are the things which would bring a lot more innovation in the digital space.
Thank you, Vimal. Over to you, Sanjeev.
Thanks. See, from a regulatory perspective, we have to understand a few kind of nuances of the country that we are in. One is KYC norms are pretty tight. On the other hand, the regulator is open to digital KYC. So, for example, if you were to go back 2 years, and oftentimes when seniors from the bank were going to the RBI for meetings, etc., what we used to ask for is make digital KYC easier. That's when lockdown had started, onboarding had become difficult because you were still dealing with physical KYC. Customers didn't want to meet. We didn't want to expose our frontline to go and meet. Since then, video KYC has got significantly streamlined. CKYC norms are also out there. We are obviously looking at putting that out. That makes it easier because then, and obviously biometric is available. So all three, but biometric obviously has to be done in person. Video KYC and CKYC can be done sitting at home. The seller sitting at home, it could be assisted, or the customer doing it all by himself. Sitting wherever he is at home or his residence or his office. So one is on the KYC front. Now that's very important because when you're doing a financial services product, you need to be absolutely sure this person is this person. Fraud and everything else comes in much later, but you want to be absolutely sure of the KYC norms being followed. So that's one area where norms have to be tight, but regulator is extremely open to looking at something which is secure, but also which is digital. Second point is then you have to look at the security of transactions. I think we had Peter, Ganesh talking about it. So also Anil and Vimal. I think one point we have to understand is when you're doing a transaction, customer needs to feel, customer and merchant both actually need to feel safe about two things. One, this money is going for this transaction and not going for, it's a call where then some fraud happens, etc. And customer needs to feel extremely secure. Oftentimes in your bank account, you may have 20,000-30,000 rupees. It could be a debit card fraud. On a credit card, you may have a limit of 3 lakhs, and that could be a fraud. Or it could be a UPI transaction also. It looks like UPI will not see, but UPI is also seeing some fraud. Of course, fairly limited. Now, two things to it. One, we can feel very happy that India is much, much lower than, for example, the rest of the globe. And it genuinely is, because in India, all card transactions in person are chip and pin. All e-com transactions are 2FA. With that, you have instances of the kind that we have seen. There is a call which looks like the transaction is for A, the transaction is for B. Ganesh, Airtel Bank has, Payments Bank has added that third factor authentication. You can get to third, you can get to fourth, but fact is, how strong is your monitoring of transactions? Normally, there are trends which are visible as the transaction comes in. It's very different from the normal trend for that customer. It's the first transaction which is fraud, etc. So is every organization looking at those trends very carefully and putting in digital transaction monitoring, which can make it safe for the customer at point one. So you can strengthen authentication, but even without that, do you know how this transaction is likely to go? I think that's an important point. All organizations, part of the ecosystem, need to look at. Regulator is extremely focused on this, by the way. Third part is obviously data leakage. Cyber risk, it could be just bot attacks. There are various elements which then go into the third point, which is just coming out from whether the data is secure. I think regulators' viewers don't have data sitting everywhere. So if you now read in conjunction the tokenization circular which came in earlier, the point about transactions, merchants not being allowed to store data, it's leading in one direction. Need to store data. Issuers can have the data, networks can have the data. Nobody else in the system needs to have the data of your credit card, of your expiry date. So if you put it all together, Shree, essentially regulator is going in a direction saying, I am willing to look at everything which makes it easier. Digital KYC is one. The tokenization and all of those circulars need to be read together. But fact is, customer needs to remain safe at the end of it. You can move from cash to digital. In cash, for example, you used to have those long back, those placards saying be wary of pickpockets. Now you don't see it because hardly anybody's carrying money in his wallet. But then equally, you need to be safe, and the customer needs to be safe that his pocket will not get picked, not in a physical wallet, but digitally. I think that's something all of us need to be extremely mindful of. And regulator, by the way, is, I think, at all points of time, 2 steps ahead of us, and definitely 2-3 steps ahead of rest of the world on this front.
Okay. Thank you, Sanjeev. I think considering that we're running out of time, I'm going to ask each one of you to possibly tell me 2 things. One is essentially a message to the government of India of what you think they can do a lot more to support, while they've already, the Honorable Prime Minister and the government all have been extremely supportive. What can they do further to essentially turbocharge and take each of you to the global platform? That is one. And second is, what is that one single message that you want to give to the end consumer in your particular segment? Let's start with Anil.
Shree, as you rightly said, the government has definitely been very proactive, be it the Digital India initiatives, the Jan Dhan bank account initiative, which kind of are the pillars for financial inclusion. But the other areas which I think the government needs to help the fintech sector as such would be on capital. The access to, the banks have the ability to access cheap capital. They are depository taking organizations. So whereas we do not have access to that, and when we are trying to access capital markets, especially with unproven loan books, the access to wholesale lending capital in India is limited. And when you try to get foreign capital, it kind of has a very complex regulatory infrastructure that you have to kind of wade through, be it ECB route or FPI route, to get the money into, especially debt capital, into your bank accounts. So I think there would be, that would be a great area for the government to kind of ease some norms so that we can bring capital in. But overall, I mean, the government and the regulator have done an excellent job in providing us with the infrastructure to innovate and offer solutions to our end consumers. With respect to our end consumers, I think what we have done with FlexPay is to offer them a flexible mechanism to do digital credit transactions ubiquitously at every merchant that has a UPI QR code, and that's a game changer, right? Like the biggest challenge with UPI is that you can do the transactions only if you have money in your bank account. But if you are using the power of that ubiquitousness and pair credit to it, that kind of solves your credit access problem and kind of drives towards our Prime Minister's Digital India and financial inclusion goals. So I think that's what we are trying to go after and try to solve for. We will be trying to build partnerships, as Vimal already alluded to. We don't see this as a zero-sum game that this is one person is going to win and others lose. That's why we have FinTech Association for Consumer Empowerment. It is a consumer-facing organization. It is focused on empowering the consumers, and we are just solution providers to the consumers. And that is the perspective we are taking. And I'm sure as we try to innovate, there will be opportunities to partner with banks and other solution providers in offering a much smoother digital experience for our end consumers. So that's what our focus will be. Appreciate all the time and all the having an opportunity to share this platform with such an esteemed panel.
Thank you, Anil. Over to you, Vimal. And if we can keep it a little short, I think I'm already getting.
Yeah. I think so. We're running out of time. But as Anil pointed out, I think so. FinTech is definitely one area where a lot of innovation is happening, capital is one area where I think so. Some little help, more help from the government and the regulators' perspective would definitely support the more innovation in the FinTech industry. Having said that, I think so, as most of us have said, NPCI, RBI and government has done a lot of, build the infrastructure, which has allowed us to innovate a lot. If I compare the US and UK as well, I think so some of our, the things which government and RBI has done is still not there in Western countries. So a really, really big plus for them. But yeah, at EarlySalary, I think so definitely, we do take care of the customers' trust and, the more on the security side. And what we feel that, the more democratizing the credit will help the end consumer, in terms of getting easy and affordable credits to the end consumer. Yeah, and thanks for providing this platform for all of us to share our thoughts and sharing.
Over to you, Peter.
Yes, it's a very good question. What do we need to ask for more of? I think from my perspective, I'd look at the technology. Artificial intelligence is there that can help with giving customers control of their data, looking at adaptive behavioral changes. It can support greater protection against risk and fraud, as well as minimizing the number of positive false declines, and giving that analytics and data-driven insight to people. So, but AI comes with a big warning sign. How far should it go? What can it do? So I'd like to see some direction from the regulator and the RBI on AI. And also I'd like to see cryptocurrency and digital currencies coming into the different modes of payments. The blockchain that sits behind it and the smart contracts are extremely powerful, and offers kind of decentralized finance, DeFi, as a real game changer to get more into developing cities and rurals. So those would be my asks: is come up with clear policies. Fintechs will try and use those technologies to get into the market, but let's make sure they're regulated and it remains a trusted environment. Thank you for your time today.
Thank you. Over to you, Ganesh.
Yeah, so my message to the government and to the regulators is a big thank you for all what they have done. I personally think that the onus is on us in the industry to actually come up with innovations which can actually meet or possibly exceed customer demands. That's my view. And my message to our customers is, as Airtel Payments Bank, we'll do what it takes to earn your trust. We've earned the trust of 30 million monthly transacting users, which is still a small portion of India. And we do believe that, we will be able to earn the trust of a large number of customers in the coming quarters. That's my message.
Over to you, Sanjeev.
Yeah, simple. I think two things. One, lots done, but lots more needs to be done by all parties. The ecosystem regulator largely between these two parties. Second one, in some ways, if commerce can come back to RuPay debit and UPI, need not be charged to merchants. If that can be worked out in a different way, I think that's important. It's just far too big for it to be just completely free right now. There is no free lunch, so if that can somewhere be kind of commerce, I think that would be one request.
Okay. Thank you. I think with that, we will be wrapping up now. And thank you to the panelists. I wish I had a lot more time for each one of you. But I think the focus, as all of you have heard, the focus is on the end consumer. The government, the policy maker, the regulators, everybody is working for you. So are the ecosystem providers. And as we heard about, they would like to provide you a trusted environment. They would like to essentially be continuing to transform and innovate and provide new solutions. They would like to ensure that there's a lot of ease and convenience irrespective of how you access this particular information, and much more about your security, about your privacy. And I think with this kind of a vibrant environment that we have, I think we are well on our way to continue to have a vibrant Bharat. And with that, thank you, and over to all of you and have a fantastic day.